Angel Mortgage Solutions. I want to thank you guys for taking the time out of your day to join us here. We have almost 30 years of experience in this room here today with Angel Oak, and that's just with Angel Oak. They have more experience also in the industry. So we're going to keep this pretty interactive. We've got a tight-knit group here today, so let's Q&A right from the beginning. So just want to, and with us here today, Scott Kubel, Leslie Rudd, Alina Derget, and behind the camera we have Carlos Betancourt.
The camera guy.
So thank you for coming. You know, this year, I know a lot of you coming off probably some of your best years ever, right? So congratulations and kudos to all of you. But you know, we're here to kind of teach you about Angel Oak and teach you about the non-QM space. We're going to teach you how you can close more loans. Thank you, Lena. And what you need to know about non-QM. And we're going to talk a little bit about Angel Oak. But we've done a series. I don't know if anyone here has been on a series of webinars we've done over the last few months. And we've had a really good feedback. And the feedback is we've dove into product. And that's what we're going to do today. We're not going to talk about our 6 securitizations in the last 12 months. We're not going to talk about the $3.3 billion we did in 2019 customer service. We're going to fly through this. Talk about the pause a little bit, right? So everyone knows what happened almost a year ago to the day, right? We had COVID come. But the one thing I want to make sure everyone understands is this was not a credit issue like it was in 2007 and 2008, right? This was a liquidity issue. People just didn't know what to do with their money. We didn't know globally what was going to happen. So that's why we paused. Since then, on May 1st, around the end of April, we launched non-QM again. And since then, we've had 25 enhancements. So almost every 2 weeks, we're rolling out another enhancement to continue to widen our non-QM, our non-QM product assortment. And one of the things, our capital side of our business, our vertical integration, is we are backed by Angel Oak Capital. One of the things Angel Oak Capital kept wanting to try to do is stress test our portfolio. Well, guess what happened a year ago? It was truly tested, and we came through with flying colors. Our loans continue to perform really well for us. Anything else, anybody? No? Good. Okay. Obviously, the difference between non-QM and agency, these are just the highlights of it. We do 40-50 ratios, the points and fees. The big thing no one really knows about right now is what's going to happen to that QM patch, right? You kept talking about, sorry, it's live, right? Kept talking about that QM patch, if it's going to expire. It's still being kicked down, the can is still being kicked down the road. We'll see what happens, I think probably sometime by the fall. So, but just keep that.
What do you mean by QM patch?
The QM patch is supposedly they're going to lift like second homes and investment properties. Government wasn't originally set up to do second homes. It was just to provide affordable housing for the homeowner, home ownership, owner occupied. So there's been talk about that not being done by agency, basically government money. They're thinking about turning it back over to the private sector, and that would be public. That would be private money, not government money.
Also, if I can
Yeah,
real
absolutely.
fast, one of the other patch was that 43% back-end DTI was supposed to be the limit, but they said, well, we'll give them a patch, a certain number of years, all right, to be able to address that. And then that patch was supposed to go away this year. So you see, you get plenty of approved eligibles past 43, right? Well, to be truly QM, you were not allowed to pass that 43 back-end DTI. So flash forward now, it's coming, it's around the corner, and on top of that, throwing the pandemic, then they're in a panic, oh my God, this is gonna be real. The market isn't ready to address that, so they repatch the patch, and like that, they keep kicking it down the road. There are some other tests that's more complicated that they're looking at, but so things will be changing as far as allowable back-end DTI on the agency world, and so that's why it's even more important to see non-QM can come in and fill that gap eventually.
Yeah, so if you're not doing business with a non-QM lender, think about that as that patch does potentially go away. think about, if you're already not signed up with one, think about doing your due diligence. And we'll talk to you about some of the key features when you do your due diligence. Like, for the best AEs, not only in the country, you have in your backyard here in this Broward County. So a lot of shaking heads that, right, you get to work with, is it Scott? So yeah. So these are all the programs we have, and we'll get into these programs, but this is kind of a slide. I'm going to jump around here. All right, so this slide looks very confusing, so I'm going to hopefully clarify it a little bit for you. And it's really just to clarify what the potential of non-QM can be down the road. So back in 2001, 2003, and 2004, when we were doing make sense loans, right, it was almost 10% of the agency business. So think about that, you know, the best, and I think other than 2020, the only better year for agency, which was over $1 trillion, was in 2003. So this past year, agency business was $3.2 trillion. So we're talking non-agency back in 2003 was almost 10 to 15% of that business. Next year, this year, 2021, agency business is expected to do about 2.5 trillion. So the potential for non-QM business can be a $250 billion business a year. That's over $200 million. So learn how to do non-QM today before, you know, you have to play catch up. So hopefully I explained that. And again, I don't want people to think of non-QM, we always show this too. You know, back in the day, it was a 580 score, 0% down, right? You didn't even have to document payment. You know, if you breathed on a mirror, you got a loan, really. And that was in 4, 5, 6, 7, and 8, and we all know what happened. Today's non-QM bar is higher than that. Our average score is about 680. We do require skin in the game, so that is a down payment. And then we all have to abide by the ability to repay. So, and then there's obviously oversight and regulation. So I just want everyone to know the difference between that and today. So it's even higher than 680. Our average FICO score is 740. Our average LTV is 71% and DTI at 30%. Who wouldn't lend their own money to these borrowers, right? So just kind of, and this slide's a little old, but out of the 11,000 loans that were securitized up through 2015, only 8 loans have gone into default. And I think if you do the math, it's like a 0.00072 or something like that. I don't think FHA has better performance than that. So, and again, as I said, you know, since the pandemic, our loans have continued to perform well. You want to take this over, Scotty?
Yeah, sure. So this slide goes into, I'll slide over here.
Yeah.
This slide goes into why make non-QM, I guess, more of a focus in your business. And right now, obviously, with all the agency loans just kind of falling, you know, on your desk, you have to take advantage of them. But you want to start mixing it in because we all know we're going to start shifting to a purchase market. Pre-pandemic, pretty much the majority of our business on the non-QM side was purchase. Right before the pandemic, we started refining a lot, especially a lot of the bank statement borrowers, because everything we did in 16, 17, 18, by the time we got to 2020, pricing was much, much better on bank statement loans. So we started refining. But the point here is, there's a few reasons why you want to maybe make this a little bit of a focus, especially in your market. Number one, when you're presenting to realtors and referral sources, when you present and you come in talking about non-QM products, it really sets off the light bulbs to your realtors and your referral sources. Everybody, you know, they're used to hearing about agency, conventional, Fannie Freddie, down payment assistance, etc. They hear that story a lot. But when you come in and you say, hey, self-employed borrowers that don't claim any income on their tax returns, we can qualify them using their bank statements. When you talk about you guys have investors that are taking advantage of opportunities in this market, did you know we have an 80% LTV, 20% down program with no income verification, no employment verification, no ratios? Those types of things really pique their interest, and it's good to get your foot in the door to be able to discuss those programs with those sources. And then obviously you're going to slide in and get all your agency business as well. So it really differentiates you from everybody else with your realtors and your borrowers. There are still a lot of big lenders that won't do a lot of these loans, or they don't want to make it a focus, I should say. They know they have to and they add them, but they don't want to make it a focus. So you can really jump in and take advantage of that because those competitors are not doing any of them. And obviously, bottom line, why do them? Make more money. At the end of the day, make more money. You can save any agency loans that fall out. One of the beautiful things we've done since we kind of got into doing agency loans when the pandemic hit is we've noticed there was a lot of loans that had those issues. I'm sure you guys have had. You submit the loan, everything looks good, you have your approval, your DU approval, your LP approval, and then you pull a fraud guard, boom, foreclosure pops up. Nobody saw it on credit, nobody knew about it, would kick it out of agency. We now, in-house, are able to move that right to one of our non-QM programs and still get that loan done. So there's a lot of saving there. Residual income, most of these loans, let's face it, especially if you're doing a full doc loan, you're gonna be able to refinance them, hopefully into an agency conventional loan a year or two down the road. So there's a little 2-for-1 effect there. And like we said, you can strengthen your relationship with your referral sources because when you're able to get that loan done, that borrower may have shopped around for, everybody's telling them, no, I can't do this, no, I can't do this, no, I can't do this, whether it's a bank statement loan or investment loan, or somebody that had a past credit issue or event, and now you step in using a non-QM program and are able to save the day and get that loan done, I bet you're the one that's gonna get the referrals behind that loan from the customer and from the referral source. Investors, we'll go into that program a little bit more, but like I said, no limit on total amount of properties that they own. And this is a big one. We can close in LLCs on any of our programs for an investment property. Full doc, bank statements, the debt service ratio program, all of those programs all apply to closing in an LLC.
Yeah, one of the things, Scott brought up, and a lot of purchase business, refis, the Mortgage Bankers Association is saying that refis are gonna drop 46% this year, right? Purchases are gonna be up 9%. So as you think about that, a lot of our business, as Scott mentioned, is purchase business. So, think about building that relationship right now with that non-QM. What does it cost you of not providing that? And one of the things we always say is that borrower is smart enough, they're going to get done. If you let that borrower walk down the street, that loan's going to get closed. We get calls probably I know I get about 3 calls every week from borrowers directly that they have found Angel Oak. So if they're going to get done, and then what we do is we turn around and refer them back out to you, the ones who've been closing business with us, who know how to close a loan with Angel Oak. So again, the loss of referrals, friends and family, self-employed people, hang out with self-employed people, right? Everyone in the room here basically self-employed, so we're all hanging out together today. So, and it's that self-employed borrower that's buying those wealthy homes today. So this is the underserved market we talk about. 50% of the people in America have less than a 680 score. 33% have less than a 620 score. We can still help them out. And as I mentioned, we've done 25 enhancements since we relaunched. There's going to be more, so stay tuned. Self-employed borrowers, 36% as a gig economy. By the end of this year, the self-employed borrower, there's going to be almost 60 million self-employed borrowers. A lot of them are writing stuff off on their taxes. Again, over 40 million people who have credit events, and since the meltdown in 2008, there's been 18 million foreclosures. We can still help them. We'll talk about that when we get to the programs. So stop turning down those loans. Take them on. You've got great AEs here to support you. Like I said, the best in the country right here in your backyard. So let's talk about programs. You want to talk?
Absolutely.
Good.
All right, so I get bumped with the bank statement program. We'll dive into the meat and potatoes, right? So I want to give you guys a little feedback about what I'm seeing right now as an AE and what's coming in the door. And on the non-QM side, it's 2 programs, bank statements and the debt service ratio. We'll talk about the bank statement now. What's crazy is that post-pandemic, the average loan size for my bank statement loan coming in the door has skyrocketed. I've never done so many 7-figure loans. Literally on a monthly basis, I'm seeing $3, $4, $5 million loans coming in and closing. I just closed at 1.9 today. A couple days ago at 1.6. I mean, we love those, right? We all love those. So I think that's important for you guys to know that that's out there, and it's really because we're lucky to be in this state right now where a lot of people are coming in, and there's a lot of big money coming from other parts of the country buying second homes and buying investment properties. a lot of those people, let's face it, like John said, the people buying the $2 million house, the $1 million house, the $750,000 house, they're usually not a straight W-2. They're usually self-employed, they might have a couple of different sources of income, or they just have, they're a business owner of a large corporation, maybe they're a 1099, et cetera, a commission employee like a lot of the realtors we work with. So that's where this program really comes in handy. And the bottom line is, we know they're not claiming the income on their tax returns. They cannot qualify for a conventional loan. This is their only option, and most of them are savvy enough to know that, so they'll work with you. Every once in a while you get one that's a pain and is gonna try and chew you down, but for the most part, I would say 80% of the time at least, they know this is their only option. So you're gonna be able to qualify a business owner using their business or their personal bank statements. You're gonna be able to qualify a 1099 independent contractor using their personal bank statements or a 1099 only. And that's the feature that we added this year. Straight 1099 only. No use of tax returns or any bank statements on the 1099 only. Those loan amounts go up to $3 million. They go up to 90% LTV at a 700 credit score, 85% LTV at a 660, and you actually only need a 640 credit score to qualify for the program, which will get you 80%. Okay? 660, 85, 700, 90%, no PMI. There is no PMI on these loans over 80%. Okay, so that's really big when you're calculating your numbers and your payments. 80% no MI 640 score, loan amounts up to $3 million. 4-year seasoning on your foreclosure, short sale, BK, deed in lieu, if you happen to have any of those. Business owner or 1099, as I mentioned. 50%, at least 50% business owner to use business statements. Several options available for personal. So we'll talk about that. On your business bank statement program, to dive in a little bit deeper, business owner comes to you, he's 100% owner of the business. He can provide you 12 or 24 months bank statements to qualify. We're gonna total up the bank statements and we're gonna apply a 50% expense ratio. We take that net 50% that's left over and we average it over the 12 or 24 months, and that's your qualifying income. It's that simple. Make it even easier is we do the income for you. You don't have to do anything. All you really have to do is gather the bank statements, send them to us, and we have a bank statement review desk that will actually calculate the income for you, give us an income number up front that is pre-approved, so when that loan gets submitted to underwriting, there is no more income calculation. That's your qualifying income.
It's 50% across the board.
It's 50% now. If the business owner, we have a questionnaire we ask the business owner to complete for us. Tells us how many employees he has, how many locations he has, brief description of the business. If the business owner is adamant that his expenses are less, right? And especially nowadays, maybe some got rid of his office space, working out of the house, working out of an office at home. He's a service provider, he's there by himself. If his expenses are less, we can go under the 50% if he can get us a CPA letter that tells us exactly what the expense ratio is. The lowest we'll go is 30%. Anything, if his expenses are 20%, we're gonna default to 30. So you can actually use, in many cases, up to 70% of the deposits on the business bank statements.
And only straight deposits, no transfers.
Correct. It's gonna be check deposits, counter deposits, picture deposits, wires, anything that makes sense with what his business does in terms of what a deposit would look like for that business, we're gonna be able to count. Transfers from other bank accounts, correct, we're gonna exclude those.
What was that formula? So it's 12 months or 24 months, add up deposits, and it's 50%?
Yeah, so let's say you have let's say we took 24 months bank statements, and the total deposit's $1 million. 50% expense ratio is 500 grand, divided by 24, that's your qualifying monthly income.
Okay.
And again, we do the number for you. Cool? On the personal bank statements, it gets a little bit deeper, which is why we do it for you. It all depends on what the borrower does for a living. Business owners is pretty cool because it's straightforward. Business owners, if they have a business bank account, we can use 100% of the deposits that are going into their personal account. So if it's one of those business owners that takes distributions regularly, transfers the money from the business to the personal, those count as income. That's the one case
Okay,
where
I
we
was
count
gonna say,
that.
that's a transfer.
That's the one time we can count it because we
I
can
had
verify.
one similar to that, it was a nightmare, I'm like,
Yeah.
they're just changing the pockets, let the transfer happen.
Yeah, no, if it's going into the personal and he owns the business and we can verify that, that's income. He's just taking a distribution, we can count that.
The one thing we're gonna look for also is if that's coming in from the business and then transferring it back to the from the
Right, they're just
personal to the business. Yeah,
recirculating,
that's,
yeah, I get that.
Exactly. Yep.
Hey Scott, question, volume amount, a percentage of your business that you do on bank
Oh.
statements that we're doing?
Great
overall?
question.
From a non-QM standpoint, I would say it's probably around 80%. 80% of my non-QM volume is bank statement program. It's a great program. Like I said, the loan amounts are big, the borrowers are savvy, and like John mentioned earlier, what you'll find is that most of these self-employed borrowers know other self-employed borrowers, and they can become great referral sources for you in the big loans.
So guys, ask the questions here. This is the interactive part. This
Yes.
is, you've got, like I said, 4 of the best account executives in the country in your backyard. So ask some of the other questions do you allow interest only? That's a question I got earlier this week on the webinar we did, so.
We do.
Yep.
This program has a interest-only feature. It's a 40-year term loan. The first 10 years are interest-only, and then it amortizes to a standard 30-year after that. You had a question, Natalia?
I
I'm
have a
sorry.
question, yes. So for non-warrantable condos, what are your LTVs?
Great question. Go
Yeah,
ahead, sorry.
no, repeat the question so we can.
For non-warrantable condos, what are the LTVs? So our guidelines is it depends on what is making the condo non-warrantable. If it's a reserve issue, under 70% LTV, we don't require reserves. 70 to 80% LTV, we're gonna require 5% in reserves from the condo, and 80 and up will require 10%. Where we differ a little bit though, where we can save a lot of loans and we have before is that most condo projects, if they're not collecting 10% in the current year, it's because they've already funded a reserve account where they have reserves set aside. So they're not gonna hit the unit owners in the current year for more money where they don't need it. So they're only collecting 3% this year, 5%. As long as they're collecting something in this year, we can take that separate reserve account, the amount that's there, and combine the two to meet the total reserve requirement. I save a lot of loans on condos using that little feature.
So max LTV on the non-warrantable,
It's up to 90%.
No, up to 90%.
Yeah, up to a full 90%.
Correct.
Yeah,
Yeah,
there's
there-
no,
there's
there's
no-
no, go ahead. let's-
Yeah, no, I'm sorry, there's no pricing hits to it, and there's no LTV restrictions. Again, as long as it meets, there still is a condo questionnaire,
Right.
because we still have an interest in knowing, is there pending litigation, excessive delinquencies, reserves, but as Scotty said, a lot easier for us to meet that reserve requirement if they do have a separate reserve account plus the budget reserves. Where I know in the agency world, they will accept the reserve account, but I mean, the questionnaire and what they put you through to qualify that is a nightmare. We don't care, just show us the numbers and we're good with it.
Is Angelo Capital keeping these loans?
They're required to keep a certain percent, but they are securitized. Yep.
Any prepaid? on these?
Prepayment penalties only apply to our investment properties. Owner occ, second home, no prepayment penalties, only to our investment properties.
Is there any other questions on bank statements? Again, this, like
Fire
Scott
away,
says,
let's
it's,
do it. Let's talk about the 1099 only. I mentioned that there was a couple of hands go up. So the 1099 only feature is really, really cool. We do a lot of realtors have been using that because, it's very simple and easy for them. No tax returns required, and it's pretty straightforward. We can take either their most recent year, 1099, 1 year, so it would be 2020, or we could take an average of 19 and 20, depending on which one they want to go with, and we can use those to qualify them. We will apply an expense ratio to the 1099. It's usually going to be about 30%. Same deal, they can get us the CPA letter on that, the same way the business owner does, if their expenses are less. 70% is the most we're going to allow on that, and then we just average it out. It's very straightforward. Minimal paperwork, no bank statements required. In addition to the 1099, the only other thing you'll have is either an earnings statement for year to date, or the most recent 2 months bank statements to make sure that income is still consistent, kind of like what you're seeing right now on Fannie Freddie with that whole COVID requirement.
Will you do that 1099 on a cash out refi? Or just for?
Absolutely.
You'll do a cash out
Purchase.
refi on
Yeah, purchase, rate and term, cash out, absolutely.
that? On a,
What did you,
I'm sorry,
what did you tell me the other day about whether Angelo likes bank statement or 1099 better?
Oh, it just depends on, typically on a 1099, we allow only one 1099. So if you have a customer that has multiple sources of income,
Right,
then
one
maybe we
customer.
would revert, and Scott will talk about that, how we would maybe do a bank statement instead, so we can allow
That's
for
what it
multiple
was.
sources.
Correct, and that's the beauty of it. It really gives us a lot of options. So like Carlos said, that borrower who maybe gets a 1099 from 2 or 3 different companies, we'd go personal bank statements with them. Because then we can list the 3 employers on the 1003 and use all the deposits coming into the bank statements. Your realtor who's been with Kai's for the last 8 years and just wants to go 1099 only, we just get last year's 1099 or last 2 years, call it a day.
If I can make one other point on the bank statement program, because this may come up from time to time. You can combine a bank statement program and if we need the spouse's income, then, and the spouse's W-2, we can combine that. So from the spouse, we're not gonna require tax returns, because we never wanna see tax returns on a bank statement program, but we will accept the W-2 and the 2 most recent bank, pay stubs, and combine, the business owner and the W-2 earning spouse, and combine those if we need to make it work.
And not just the spouse, the borrower himself, he has W-2 income as well, you can do both, self-employed and W-2.
And in that case, we'll use the primary wage earner's credit score, not the lower of the 2. Yeah.
Oh, that's good.
Yeah.
Yeah, across all programs, they're gonna use the primary wage earner's credit as the qualifying,
Same applies if you have 2.
which could help or hurt. but-
Yeah.
Sorry, same applies if you have 2 individuals that are self-employed applying together, husband and wife, each one owns their own business, or maybe one's 1099, one's a business owner. You can use bank statements from each one's business. You can use 2 separate personal bank accounts if they have their own bank accounts, or you could go 1099 only for, say, the realtor, and the business owner use his business bank statements. There's a lot of flexibility.
I know this stuff.
You guys have
So
done this
guys,
before?
anything I could add, you really wanna know this program and add it to your repertoire. It's gonna be big loans, savvy customers, it's gonna lead to more referrals, and the way things are going, especially in our market, I think this program is really, really, really gonna pick up in the next 12 months.
Any questions, bank statements? All right, who wants to run with this one? You wanna run with this, Liz?
Alina.
No,
Alina.
This is Scotty's show. Or Alina.
Go ahead, Alina.
So investor cash flow is probably one of my favorite programs. I've always pushed it. It's so easy to qualify for if you have certain criteria that meets with the borrower. We go up to 80% LTV, 75 for cash out, with the credit score starting at 640. This is a program that's perfect for your investor borrowers, or even somebody that could be in a hard money loan that you want to refinance them out of to get a lower rate. 4-year seasoning for foreclosure, short sale, BK, deed in lieu. There's no employment, no income verification. So the way we qualify your borrower, we go strictly on the cash flow of the subject property. So a minimum requirement for debt service coverage ratio is at 1%, and we recently rolled out with the 700 plus score, max 70 LTV, there's no DSR requirement. No limit on the properties the borrower currently has, there's no DTI issues. So if your borrower has 20 other properties, we don't care. You don't even have to list them on the 1003 if they're under an LLC. Only the borrower is personally liable for them. And then up to 5 properties can be financed through Angel Oak, which is great if you have an investor borrower that wants to do multiple homes at once.
And one of the things I should have said earlier, again, we're backed by Angel Oak Capital, so there are guidelines, right? We're not going to someone else to get their okay. 30% of the loans we close don't meet our guidelines. So just think about that, right? So when Alina said, we'll do up to 5 properties, I've seen some of these get 10 properties done from one borrower. So again, that's why having these experts working with you hand in hand on all your deals is truly important. And, sorry.
So what he's saying, like one of the requirements for this program is that the borrower must own a primary mortgage, and we have to look at the last 24 months history, no lates whatsoever. But to kind of show you how there's a gray line, if you have somebody, and right now you see that a lot, living in New York, where it's typical to rent, not to own, and they want to buy an investment property here, whether it's a first-time investor buyer or maybe their second, third property, 9 times out of 10 you can get that exception with the canceled checks. Again, we have to look at the full scenario if it's a strong borrower or not.
The canceled rent checks, you mean?
Correct.
You have a question?
Alina?
Yeah. On a refinance, do you have to be currently renting the property? Or
If you pull
can
in-
you go off the appraisal?
So if you pull in cash out, the property cannot be vacant. It has to have a renter in there. And we go off the market rent analysis, or you can provide a lease agreement with 3 months canceled checks.
Okay,
We
so
will
you
take
can
a break.
just do an appraisal, you don't have to document with
You don't have to, no, we always require market rent analysis, and we'll use that number, but let's say your rent for your lease agreement is a lot higher, and you wanna use that number, then you can provide it with the lease agreement and cancel checks to support that number.
Alina, question, and you talked about the 770 score, 70 LTV. Can you be more specific on that? 700 score, 70 LTV.
Oh, the
It doesn't
DSCR number?
does it
Okay.
even matter at that
So
point?
the way, it does not, so the way we calculate the debt service coverage ratio, you take your rent, you divide it by PITI plus HOA if applicable, and that has to equal to at least 1.0. If, let's say, it does not, and your LTV is 70 or below, and the score is over 700, we don't care about that number. You're fine, there's gonna be a quarter
There's
hit
no
to
debt
the
service,
rate.
yeah,
Correct.
there's no debt service ratio. If you have a 700 score and your LTV is 70% or less, doesn't matter what that rental income is, the loan qualifies for us.
And Alina mentioned something, you have a borrower maybe who does hard money. This is one of those 25 enhancements we just recently did was cash out. We use appraised value after 6 months. That's pretty big. That was only up to about a month ago, so.
And I'm doing one right now for one of my loan officers. She's doing actually 6 properties. You were helping me work on that, all pulling cash out, and he's about to do 2 more for one guy.
What about foreign national?
We don't do any foreign
That's
nationals
a John
right
question.
now.
John?
No, unfortunately, right now at this time. we do
Carlos's
not.
favorite program.
John?
Did not come back.
Not yet. Not,
But they would be good to do on this program.
There you go, what? Thank you, Scotty.
A couple points, so if I can add to Alina, a couple points. So, to your question, you're gonna use the rent schedule from the 1007, right? If it's a refinance, we can go off the rent schedule of 1007, or whatever they're currently leasing the property for. And we do that at 100%. It's 100% of the 1007, 100% of the current rent.
Yeah, we're not cutting that.
Correct, we're not cutting that. Cash out, rate and term, or purchase. So, like John said, there are a lot of hard money, there are a lot of investors who used hard money to buy a lot of properties over the last few years, and they're stuck in loans coming up with balloons or 9, 10, 11%. Pricing on this program, you guys can all go to my website and verify it. Depending on your LTV, you could be in the 4s.
It starts at
On an
41.
investment property with no income verification, no employment verification, no ratios, you're in the 4s. Investors are all over it. And the word is kind of getting out that this is out there in the investor community. On the purchase side, 20% down, no income verification. Purchase, qualified off the debt service ratio. It's really unheard of, and the pricing is insane.
And you
And
can go
Alina's-
up to 4 units, by the way.
Yeah,
So you
great
could do
point.
single family condo up to 4 units on this.
Yeah, so that, yeah,
If loans closing an LLC, do you report to the bureau?
So,
they
great
have to
question.
personally, yeah.
Yeah, the borrowers, so there's a lot of confusion. It's still gonna be underwritten under the borrower's name, so he or she's gonna be personally liable. We're just gonna invest in the name of the LLC.
The loan will not be in the name of the LLC.
Correct.
It's gonna be under the borrower, just
Just the property.
And the LLC, just for clarification on the LLC, cannot be more than 2 individuals on the LLC. If there's 2 individuals, both would have to qualify for the loan. But we're not using income, just credit-wise, they both have to qualify for the loan. And the LLC has to be set up solely for the purpose of owning and managing real estate. Good question, guys. Keep them coming.
Yeah, please fire away. This is another probably.
Amazing
This is the
program.
other half.
Super, super.
I mean, Scott's business is skewed higher on the bank statement side, but traditionally through entire country, bank statements are probably 65% of our business. Investor cash flow is probably close to 20 to 25.
Yep.
It's
climbing.
yeah, it is climbing because we've done the cash out enhancement and stuff.
Can we do multifamily, duplex, triplex, fourplex on this?
Alina just
Alina?
said that. Yep. Yeah, we
Yep.
can do up to 4 units. So.
Oh, to mention, and not on this program, one of the new recent changes we also made is that duplex cannot be considered as owner-occ on other programs.
Yeah, not this program, but other.
Yeah, other programs. So it doesn't have to be an investment automatically.
Questions? Asset qualifier? Good.
You're the expert now.
Favorite
So,
program.
this is a cool it's a cool feature. Probably do a handful of them a year, but you'll always have that borrower, maybe that's retired, or maybe that can't show employment, or whatever the case may be, but they're sitting on a ton of assets, stocks, bonds, mutual funds, cash. We can qualify them based on the assets they have in the bank. We have a calculation we do for you. All you really have to do is take a fully completed 1003, list all of the assets that the borrower has, obviously with the type, is it an IRA, a 401k, just a straight securities account, and we can loan them up to 75 LTV purchase, 70 LTV cash out, with a 700 credit score, without any income verification, just based on the assets that they have, we can qualify them for the loan. And we'll do the whole calculation for you.
Now, basically, if they don't have at least $2 million, don't even call. No, but it works. If you, and I've done, so last year I did an asset qualifier and an asset depletion back to back. So if you got someone, and they're out there, that are just sitting on a pile of money, yeah, they're not working, they can't prove it, they can't even go bank statements for whatever reason, but they are sitting on a pile of money, I would suggest, if they have less than 2 million, they might get away with $1.5 million, depending on the loan amount, you know, but typically these folks are looking to buy big homes. So you know, definitely $1.5 million minimum, but if they're sitting on a pile of money, then this is a great alternative, for sure.
Again, think outside the box, right? Again,
What restrictions would be on what kind of assets? I mean, like
So
growth stocks versus.
So the reason he mentioned a couple different types of assets, we will apply a certain percentage of those assets to be used. So 401k, IRAs typically is about 70%, I believe, if I'm not mistaken. Cash, 100% will give you.
The rule of thumb is gonna be anything that's liquid.
Yeah, if it's pure liquid, we'll give you 100%.
I mean, what I
Correct.
guess I'm trying to say is, do you need a portfolio, or can you go off of an individual security? Do you look
No,
at
so
it as?
so we're gonna ask you for, so whatever assets you're going to use, we're gonna ask you, so we wanna go back 6 months to make sure you've had those assets seasoned for at least 6 months. So we're gonna ask you from, 6 months ago and maybe a current. I don't need all 6,
But
but
I
go
think-
back 6 months, go current, of whatever assets you're gonna use to qualify. Then based on those assets that you provided, then we're gonna throw that into the formula. And then, based on that formula, they're gonna say, yeah,
I
those
think I
assets
understand
meet.
what your question is. Are you saying, so like, let's say it's a Merrill Lynch account, and it's got X amount in mutual funds, X amount in common stock, X amount in annuities, we're gonna use the total, the ending balance, total assets at the end on that statement. That's the number we're gonna use.
I guess
and
what
what
I'm trying to figure out though is, some securities are more risky than others, right?
No.
If
That's
you're
It doesn't
not
looking
their
at
matter.
policy, they don't care
It's
about
whatever,
that.
it's whatever, we're not looking at your individual holdings. So, to your point, you have a Merrill Lynch account, okay? That Merrill Lynch account says there's a balance of $2 million,
That's all I
okay?
care about.
That's all I care
That's
about.
all I
I'm
care
not drilling into, does he have Bitcoin, does he have,
and one of the,
whatever.
and one of the other things is, this is incorrect, like I said, this is only needs to be sourced and seasoned for 6 months, so.
6 months.
Yeah, all right, do we have a platinum jumbo prime?
Pardon?
No,
I was sold out.
no, but if it's held as an
next
investment, in
week.
part of an investment portfolio, that's different, that's fine.
All right, so this is our platinum jumbo mortgage. We'll go up to a 90%. This is a full doc program. 4-year season on your bankruptcy or credit events. Loans up to $3 million. Owner occupied, second homes non-owner. Assets must be sourced in season 30 days. Purchase cash out refi. This is really for your jumbo who can't qualify for traditional jumbo that requires sometimes 6 or 7 years from the credit event. So pretty good rates here. We stay tuned because maybe by April 1st we'll have a better prime jumbo. So just stay tuned. Let's portfolio select up to an 85%. This is also another full doc loan. Credit score start at 620. This a little less seasoning on your bankruptcies and foreclosures. Loans up to $2.5 million. Again, purchase rate. To every program we have is purchase rate and term. Cash out. Owner occupied second homes up to a 50 DTI. Again, Carlos.
Johnny, so on this one, customer just got out of bankruptcy or any of those hardships. Is there a prepaid in case I want to refinance them down the road
No.
to an agency loan?
So as Scott mentioned on that 2-for-1 loan, this borrower probably fits that 2-for-1 loan. Close this borrower today, even though you'll only be 24 months out from a foreclosure, right? Get them in the home because everything seems to be appreciating everywhere in the South, right? Get them in that home, and then as they get that credit event further and further in their rearview mirror, you can turn this into an agency loan. So that's what Scott's talking about a 2-for-1 loan. Do you have a question?
Yeah, was there an MI from the previous?
No,
item?
none of our programs have MI.
So most of the loans I mentioned that were submitted agency, and we come to find out something we didn't see, this is the program we're usually gonna get them into, the portfolio select, to be able to save that down.
With 15% down, huh?
Mhm.
Yeah?
Okay.
Any questions, comments? Yep.
On the portfolio select, what kind of verifications you do?
If it's W-2, we'll take W-2. If they're self-employed, we'll use tax returns.
Full doc.
Full doc, it's a full doc loan.
Full doc.
Yep. Just to kind of, this is some of the technology pieces that we have are on our website. This is our quick quote tool. You just put in these 7 pieces of information and it'll display your rate.
The most underutilized tool in
Yeah,
the business, I like to say.
and it's
Do we-
available,
do we need a
Scott's only
password?
available
No
23
credentials.
hours out of the day. This is available 24 hours out of the day.
No credentials required.
Okay.
You can literally just go to our website, click on quick quote, and you can price out any scenario right on the spot.
So here, again, our most popular product, a lot of people forget to change that to bank statements. And the rates that it'll display are par rates, so dependent upon your company and your comp plan, that you would add to that rate. Questions about quick quote at all? Yes?
I know we're only talking non-QM right now, but if you put in a program and it qualifies for conventional, would it spit it back? Good question. No, there's another, it's agency quick pricer on the same website, right next to each other. That's what you would use for your
Yeah,
agency.
but that one,
Two
that's
prices.
even, the agency is even easier than this one. It's amazing the agency price that we have.
Yeah.
So I encourage all of you to compare our agency pricing versus others.
Don't need credentials for that one either, right
Yeah.
on.
So that's our pricing tool, a quick quote, our quick qual. So this is how, after you run that pricing scenario, so if you want to get us a loan application, what do we call them now, 3.4? 1003. Don't throw anything at me. A credit report, and if you upload the bank statements, you just drag and drop them in there, and then you pick your AE, and they'll do the pre-qual for you. Usually it's within 24 hours. If it's a bank statement program, maybe wait a little longer because we're calculating the bank statement income for you. Anything else to add to that? No? Good. I guess this is a little bit more detail, so. Bank statement review team, we talked about that. One of the things about that, I've had some AEs get deals that maybe they went somewhere else, maybe it was at a time when we didn't have personal bank statements, and they went with this other lender, and that lender didn't calculate the income till the loan came in-house. We're doing this all up front for you. No one in this room is gonna publish a pre-qual for you without looking at that credit, knowing that credit, looking at that 1003, knowing that 1003, and then looking at that, calculating the bank statements for you. That's all being done up front for you. Again, I'm kind of jumping ahead of myself here, but we'll do all that for you. 1099, chat, we have a chat. Yes?
You talked about a deal from another lender. Can we take a transfer appraisal
Yes.
from another
If
lender?
it's done by an AMC, yes.
So
Yeah,
we could,
we get that every once in a while, so a couple things on that. Definitely have to make sure that it was ordered through an AMC. If it's a fallout, especially from a major bank, like a Bank of America, Chase, lots of them, they don't do it through an AMC. So if you have any doubt, you would send it to us, we know what to look for, where to look, and then we can give you the thumbs up. Also, depends on the aging. We're a little bit more restrictive on accepting a transferred appraisal, so we typically want it within 30 days of the time that it was ordered and 60 days from the time that it closes. So we are a little bit more restrictive on the timeline that we will accept a transferred appraisal. But in principle, yes, we will accept the transferred appraisal as long as the lender who did it is willing to transfer it to us, which most do.
Again, we have chat specialists on our website, so if you're having any issues, if your AE is not available, which they always are, you can actually use that chat specialist. TPO portal, good one.
I'd like to talk about marketing. Do we have a slide on the marketing?
Yeah, that's the thing.
So this is really what we can help you guys do. Sorry. So again,
So one of the features that we have really cool, this you do need credentials for, which we can set you up if you're an approved broker. We'll get you set up for, but right in our portal, we offer a ton of marketing tools that I don't think are used enough. Every program we offer, the bank statement program, the investor cash flow program, asset qualifier program, all those programs, there's an individual flyer that we have that you can go in, take our pre-made flyer, customize it with your logo, your contact information, even your disclosure if you want to change the disclosure, and print as many of them as you want and paint the town with them to your referral sources. So like we were talking about earlier with, we're doing realtor presentations or setting up any presentation to a CPA or a builder, realtors, etc., financial planners. You can use all of those flyers totally free. There's also some really cool, you guys have seen the stick figure whiteboard videos you see a lot. We have some that are pre-made, one for the bank statement program, investor cash flow, etc. Makes no mention of Angel Oak. It's basically you marketing that program to your referral sources. You can copy, paste it to your YouTube channel, your website, social media, anything. There's pre-canned social media posts as well. I have a nice picture, bank statement program with verbiage underneath it if you want to market it directly to a borrower or directly to a realtor. And you literally can just copy paste to your Instagram, to your Facebook, etc. And then there's also a slideshow just like this one for you to present to realtors. So when you go to do these presentations, you don't have to just make it all up. The slideshow is there. It's customizable. You can put your logo in the corner, your contact information in it. You can customize any of the slides if you want to, touch on any specific things and use that. Comes with a promo flyer that you can use to give out to, let's say, you're going to a large real estate office. You can put that flyer out 2-3 weeks in advance, promoting the event with the date and the time, etc., and what you're going to talk about. And lastly, all of the account executives in the room, we'd be more than happy to come along with you if you're presenting to realtors or anybody else as your AE, your underwriter, your investor partner, whatever you want to call us, to help you talk about these programs.
Yeah, that's the most powerful. I believe that we have a lot of powerful marketing tools, but you have, again, 4 of the best AEs in the country right in this room and right in your backyard. And as this pandemic gets further, we can do group meetings with your referral sources, or even using Zooms.
Yeah.
I did one 2 weeks ago with a loan officer, and she had 12 realtors on the call, and every one of them loves these programs. Like Scott mentioned, 1099. A lot of our realtors are 1099, so they love these programs, and they present on your behalf. They don't say anything about Angel Oak. They talk about we're just one of your investors, and they'll keep referring it back to you that you have access to these programs. It's a very, very powerful program.
It's free.
It's free. It's free.
Just send me a loan.
This is examples of the whiteboard videos that we have. Here's the realtor presentation. This is all done for you. Again, you don't have to recreate the wheel at all. This is all done for you. Again, different. We talk about differentiating yourselves. We're customer-centric, non-agency specialists. Again, we focus on non-QM. The years of experience, we have 30 years just with Angel Oak in this room.
You're about what, 25?
Oh, that's so cool. That's so cool.
Is that wrong? Is that wrong?
And again, okay.
I'll be here all week.
Again, this is. Oh yeah. So these are some examples of some we didn't talk about. We do allow gift funds on our programs. What are your turn times?
2 to 3 right now.
2 to 3 days right now, and underwriting 2 to 3 days to clear conditions.
Really closer to 2, but
Yep.
call it 3 just in case.
Just
Yep.
give funds on investment.
No.
No.
That one, no.
Thank you. Good question.
Nice try, nice try.
So if we get back, because I know we went real fast through it, so let me.
A lot of them.
So let me roll back real quick on the gifts that we did. So borrower must have at least 5% and 6 months reserves of their own funds. The rest can be gift on any one of our owner occupied programs. But yeah, investment, no gifts on investment.
So, we talked about our quick quote, and the rate that you get there is par. We do offer 2 ways to get paid: borrower paid compensation, where it's charged to the borrower as an origination, or lender paid compensation, where it's built into the rate. And that's all depends on your broker compensation. So But all of our programs do offer lender paid compensation.
But by the way, just wanted to add, we only source our seasoned funds for 30 days, by the way,
Yeah,
on all of our programs.
30 days out.
We're not going back to 60.
Well, there you go.
There you go.
Structure.
Someone's very smart, yeah.
And of course, on gift funds, we don't ask for blood tests, so everyone's your brother, your brother.
Any questions, you know, again,
Even today.
try to be conscientious of your time. We do have a booth out there, so if you have other questions that we didn't get to answer, you know, feel free to stop by the booth. And any other questions? Yeah.
Yeah, I'm a new broker owner, and I'm trying to train my MLOs to use non-QM.
All right.
So what kind of training programs do you guys offer for these MLOs that are not accustomed to non-QM?
I would say bring one of us in.
Yeah.
Let us do a presentation, whether it be in person or Zoom,
Okay.
and let us really do a deep dive into the website and the pre-pricing engine and the tools that are available. I think really what I've noticed is with some newer MLOs, once they get an understanding, they kind of see the
Yeah.
programs, when they see some live scenarios, they start to really dive into it.
It took me a while for mine to click,
100%.
and then my focus is right out of university, went on to an MLO.
Mhm.
They have no idea about this stuff,
Mhm.
and I want them to train.
Yep, and that's the experience that everyone here in the room with Angel Oak has. They can train your loan officers for you, and that's the, you know, they know, and that's the one thing, when you are looking at, you know, a non-QM lender, look at obviously the experience they have, and not only that, they know the process inside and out. They're not just throwing stuff over the fence. The pre-quals they do are tight. They know how to register a loan, how to submit a loan, how to lock a loan, everything they know. And then they've got support staff in addition to that, so.
And I would like to add also that we actually do agency really, really well. We offer DU and LP. We have some sweet spots, investment properties, up to 85%, higher LTVs, cash out refis. If you price us in any of those, I think you're gonna see our pricing is very competitive. Turn times are 2 days. We do them really well.
Are you on loan center for convention?
We are.
Yep.
We are. You just have to add us as a lender, but we are on there, so it'll come up and you'll see. And you're getting agency loans with a little bit more of white glove service is what I like to call it. Because we're a little more hands-on as account executives with every loan all the way through.
Great.
Well, thank you very much.
Well, thank you everyone for
I want to thank Angel Oak for joining us and supporting our trade show and exhibitor. They've been a fine lender in the market. They've known the non-QM market very well. Please, I encourage you. I've done a wonderful presentation here, so thank you
Yeah,
for.
and thank you for that, and it's really important to support your local chapters, and Angel Oak is a big supporter of the local chapter here. FAMP, we're also a preferred supporter at the state level for non-QM too, so definitely support your local chapters. It goes a long way, not only to the state and to the national level.
And that we appreciate. Now, one thing is please visit them at the booth. They spent a lot of money to talk to each one of you, and they want to make the most of it. Now that you got the 4 best in the country, and guess what? The whole country's moving to Florida. So you got to be with the best. Now, folks, just to let you know, the next